It is the 6th of December 2021. My name is David Hickson, and in today's market update, I'm going to be speaking about Bitcoin. An interesting thing happened to the price of Bitcoin on Saturday. It fell by over 20%, and it has since recovered. But as we know, we were expecting a 20-week cycle trough to form in Bitcoin and in other markets. In last week's market update, I discussed the 20-week cycle trough, which was expected in Bitcoin and also in stock markets and indeed in gold as well. But Bitcoin has provided us with a very interesting example to discuss. And so in today's market update, we're going to be focusing on Bitcoin. Here is the bigger picture of Bitcoin, and you can see that I am displaying this chart in a logarithmic fashion. It has a logarithmic scale, and so it might look a little different to the charts of Bitcoin that you are used to looking at. Perhaps you are used to looking at charts of Bitcoin on a linear scale, which basically the y-axis on a linear scale represents price movement, absolute price movement in terms of dollar value of Bitcoin. And you can see that recently, of course, we've seen tremendous swings upwards and downwards. A more useful way of taking a look at a long-term chart of an instrument that has experienced very big price swings, such as Bitcoin, is of course on a logarithmic scale, which represents each price move as a percentage price move. And it makes it a little easier to see the cycles that have been influencing the market. So in terms of the cycle analysis, you can see that we have an 18-month cycle trough over here at the beginning of 2015. And you can see I have influenced this analysis. There are some pin symbols over here and over here. This one is for the 18-month cycle trough in March of 2020. And I will speak about that in a moment. The other influence that I have had on this analysis is to pin the 18-month cycle trough here in July of this year, which is also when a trough of 18-month magnitude might have formed in stock markets around the world. So that's one of the reasons why that particular trough is pinned over there. But to come back to this trough in March of 2020, the reason why I have positioned that 18-month cycle trough over there is because of the fact that during this period of time, when Bitcoin was rocketing upwards, it was very difficult to position an 18-month cycle trough. So when you are performing an analysis and you have that kind of accelerating upward movement, it can be very difficult to position a cycle trough correctly. And so the best way of performing an analysis during that kind of time is to look at other markets and see how they are moving and being influenced by cycles, because all markets, I should say, are influenced by very similar cycles. It's Hurst's principle of commonality, which I have spoken about before. Now, you will know that there are 3 18-month cycles in a 54-month cycle, which is the next longer cycle in Hurst's nominal model. And so here you can see 1 18-month cycle, 2 18-month cycles, and 3 18-month cycles, which would seem to imply that the trough in early 2015 was of 54-month magnitude, and of course the trough in March of 2020 was also of 54-month magnitude, which creates an interesting correlation between Bitcoin and stock markets and many other financial markets, which formed a trough of at least 54-month magnitude in March of 2020, which you will know about if you have been watching these market update videos, because I discuss it in pretty much every single video that I post. So the interesting thing about Bitcoin, of course, is that it is often described as a disruptor. It is something totally new in financial markets. Well, of course, there are elements of Bitcoin that are new. Things like the blockchain and so forth are new concepts. But the way in which Bitcoin moves, the way in which the price of Bitcoin rises and falls, is nothing new. It is clearly influenced by cycles in the same way as stock markets and other currency pairs. So let's take a look at what has happened since the March 2020 trough and speak about troughs first, and then we're going to take a look at the peaks and we're going to discuss what exactly to expect next. Let me turn these semicircles off. So as mentioned, I have this trough over here as the 18-month cycle trough in the middle of July of this year, and that is a clearly prominent trough that has formed in Bitcoin. Bitcoin gave us another very strong move up over here over the end of last year and into the first couple of months of this year, again making it difficult to position this trough over here, the 40-week cycle trough, but we do have a fairly good clear cycle shape for that 18-month cycle trough, with this trough over here in the middle of July, which also of course happens to be when I believe that trough formed in many stock markets. So what has happened since then? Well, since then we have seen an exemplary example of cycles influencing the market. Since the 18-month cycle trough over here in the middle of July, we had an 80-day cycle trough that formed over here in the third week of September. And as discussed in last week's market update video, there's a little bit of a question about the position of the 40-day cycle trough. I like to position it over here in the last week of October, which means, as I mentioned in last week's market update video, that the price of Bitcoin is coming down into a 20-week cycle trough. Now, of course, price is then expected to bounce out of that 20-week cycle trough once that trough has formed. So if we zoom back out again, let's consider to what extent price is expected to bounce out of that 20-week cycle trough. Here is a prominent trough in March of 2020, which, as I've mentioned, is probably a 54-month cycle trough. So that's a really big trough. Potentially we have a 54-month cycle pushing upwards, which is what we have to thank for the tremendously bullish movement towards the end of last year and the first couple of months of this year. Now we have seen one 18-month cycle elapse. We are now in the second 18-month cycle of the current 54-month cycle in terms of the trough analysis. We are over here at the moment, which is this first 20-week cycle trough that has formed following that 18-month cycle trough, and we are therefore still very much in a bullish market, and we should expect price to bounce out of this 20-week cycle in a fairly bullish manner. The first 20-week cycle following an 18-month cycle is of course likely to still be a bullish move. And considering that potentially a 54-month cycle trough formed in March of 2020, there is a good deal of bullishness in this market, despite the scary move that it gave us on Saturday as it dropped down very steeply over here to potentially form the 20-week cycle trough. But before we move on and take a look at what happened over the past few weeks in more detail, let's speak about the peak analysis. Now, you probably know that when Hurst discovered the cycles that he defined as influencing financial markets around the world, he studied the price movements of stock markets. That was the data that was available to him, and he used mainframe computers to discover the secrets of the cycles, and he defined various principles. One of those principles is the principle of synchronicity, which tells us that the cycles that influence financial markets are synchronized at their troughs. As in the many years that have passed since then, 50 years that have passed, we have pretty much come to accept that that is true for stock markets. But when it comes to currencies, and particularly to currency pairs, such as this is, Bitcoin against the US dollar, it is possible, of course, that those cycles might be influenced at their peaks. And so we really do need to consider what is happening to the peaks. So at this point, we can take a look at a peak analysis on the price of Bitcoin as well. The peak analysis is fairly interesting. As you can see, we have an 18-month cycle peak over here. That was in December of 2017. That was actually when I first started analyzing Bitcoin. And in one of the first blog posts that I ever wrote about Bitcoin, I discussed the fact that it seems likely that Bitcoin was influenced by cycles that are synchronized at their peaks. And in fact, I wrote my blog post just the day before that peak, I think, or perhaps it was a week before, just a little before that peak formed, warning that an 18-month cycle peak was due. And indeed, that 18-month cycle peak did form. And of course, we saw a fairly strong downwards price movement following that. Since then, we have seen a potential 18-month cycle peak form over here. That was in 2019, I think. But then things get a little bit hazy if you take a look at this peak analysis. And this introduces an interesting idea, which is that when it comes to currency pairs, in my experience, you often see examples of the synchronization of the cycles moving from synchronized peaks to synchronized troughs and back again. It's a really interesting concept. I don't have any absolute answers as to why it happens, but I have observed it over many years of trading currency pairs. And that is that sometimes a trough analysis, in other words, an analysis based on the idea that the cycles influencing the market in question are synchronized at their troughs. So sometimes I see examples where a particular currency pair exhibits a very good analysis on the assumption that the troughs are synchronized. At other times, however, the peaks seem to be synchronized, and the analysis works better as a peak synchronized analysis. I don't know why it is. Perhaps somebody out there could provide me with some reasons as to why that is. But certainly up until December of 2017, Bitcoin seemed to behave as if it was responding to cycles synchronized at their peaks. However, since then, the analysis and at the trough, at the lower end of the charts, the analysis based on troughs being synchronized has, in my opinion, been much better and much clearer, indicating that Bitcoin might in fact be responding to cycles that are influenced at their troughs at the moment instead of peaks. So one of the results of that is that the peak analysis becomes less clear. So here you can see an 18-month cycle trough over here. I think that was in about the middle of 2020. So that was fairly reasonable, but then of course we had the big strong move up here at the end of last year, and then a 40-week cycle trough, a very difficult to identify 20-week cycle trough. And in fact, it's probably time for me to zoom in here. So let's do that. And let's zoom in on this period of price action. There we go. Here, I think you can see how the peak analysis doesn't make nearly as much sense as the trough analysis. There is the peak in the middle of last year. Here is the 40-week cycle peak. That's quite a good position for a peak. The 20-week cycle peak is positioned over here. You can see that's a very poor position. You wouldn't immediately identify that as a 20-week cycle peak. I'd be more inclined to position this peak over here as being a prominent peak, but let's not get caught up in the complexities of performing an analysis. The important thing is that the peak analysis has not been as clear as the trough analysis, in my opinion. But the important thing to notice is this very obvious nest of highs over here. In previous market updates about Bitcoin, I have spoken about the fact that we were expecting an 80-day cycle peak to form, but as this peak analysis has shifted, you can see that we have a very clear nest of highs, warning us that potentially an 18-month cycle peak has formed. So here is the interesting thing. Markets tend to move between troughs of a particular cycle magnitude to peaks of that cycle magnitude back to troughs of the same magnitude. That's a gross generalization, but that is what tends to happen. And so if we zoom out a little bit and do this, I can demonstrate what has potentially happened here. Is that the price of Bitcoin has moved in a three-wave move, which is usually how it does move from a trough to a peak of a particular cycle, from an 18-month cycle trough into an 18-month cycle peak. Where is it going now? Well, of course, we would expect a 3-wave move for it to move down into the next 18-month cycle trough, if indeed this is an 18-month cycle peak. But the jury is still out on that question. We need to be aware of the fact that it is possible that that is an 18-month cycle peak. I do have another analysis which presents a slightly different possibility. Let's take a quick look at that. Here is that analysis, and that analysis places the 18-month cycle peak over here at the peak that formed earlier this year. Was that in April of this year, I believe? And so the move down from the peak of the 18-month cycle into the trough of the 18-month cycle was this move over here. Now what price is doing is it is moving from the trough of the 18-month cycle up to the next peak, which is of course only expected over here towards the end of 2022 or early 2023. And so this move is expected to be quite different. We're going to get a move up, then it's going to come down, and then it's going to move up. So how do we make sensible trading decisions when we have that complete conflict of possibilities? The way in which we do it is we keep our heads about us and we focus on the cycle that we want to be trading. And at the moment, price is bouncing or is potentially forming a 20-week cycle trough. So what are we expecting price to do? One of the tools that we can use is our composite model line, which gives us an indication of the influence that the cycles have had upon price in the past, and an indication of what the analysis shown on this chart tells us to expect. And the implication here is quite clear. Price is going to bounce out of a 20-week cycle trough when that trough has formed, and it's going to rise up to a 40-week cycle peak over here. At that point, we can again reconsider our peak analysis and decide which of these two analyses is correct. But the point is that this analysis tells us to expect a bounce out of the 20-week cycle trough. Let's go back to our previous analysis and see what is expected on that one. So here is the composite model line on this analysis, and you can see that again we are expecting a bounce out of the 20-week cycle trough. And in this case, although when I drew very roughly my expectation for price to come down into the 18-month cycle trough over here at the end of 2022, according to this analysis, I drew a sort of a zigzag downwards move, but the composite model line, which is using information from the cycles found on the charts, is in fact indicating a more prolonged upwards move before the markets move down. So how can we make sensible trading decisions? Well, the answer is really very simple. We are watching price as it bounces out of this 20-week cycle trough, and that is going to give us some kind of a bullish trading opportunity once we have confirmation that that 20-week cycle trough has formed. And as we watch price unfold, we can update our analysis in terms of the peak analysis to decide whether the 18-month cycle peak has formed or whether it hasn't. Now, I mentioned at the beginning of this video that Bitcoin gives us a really good example of what is happening in terms of being able to track our analysis day by day and observe the formation of a particular trough forming in the markets. And in last week's market update, of course, I was speaking about the 20-week cycle trough, which was lying ahead of us in terms of Bitcoin. And let's display the FLD, the 20-day FLD, because it provides us with a really useful example of how we can use the FLD to keep an eye, to monitor what's happening in terms of the cycles influencing this market. You will know if you watched last week's market update video that price had come down to this low point. I think that was Black Friday, so that was the last Friday of November, of course, when price dropped down fairly strongly. And here we have our circle for the 20-week cycle trough, and this is our slightly staggered nest of lows. We are expecting a 20-week cycle trough to form, and I think I mentioned in last week's market update video that this could potentially have been a point at which the 20-week cycle trough was forming. So how do we monitor that? Well, one of the ways that I monitor it is I take a look at the future line of demarcation. This purple line, the FLD, it is my favorite cycle tool. As you know, it has many applications, and one of those applications is being able to inform our analysis. Another application is in being able to trade the fairly regular sequence of interactions between price and the FLD. Now, I speak about the sequence of interactions between price and the FLD almost every single video that I record. I'm going to go through it very quickly over here, starting from a trough of at least 80-month magnitude when you are looking at the 20-day FLD. If you are looking at the 2-day FLD, then you would be starting from a trough of the 10-day cycle. But in this case, we're looking at the FLD based on the 20-day cycle, and so we start identifying our sequence of interactions from an 80-day cycle trough over here. And the first interaction is an A category interaction, which is expected to achieve its target and exceed it, which it did. The B and C category interaction happened at the time that the 20-day cycle trough forms. As mentioned in last week's market update, that was an extremely bullish failure of price to come down and find support at the level of the 20-day FLD, revealing just how much bullish pressure there was in the market. Then so that is the BC category. I call it a BC combination nowadays. And then we have the D category interaction, where price drops down below the FLD as it comes down to form the 40-day cycle trough. We expect price to achieve its target to the downside. The fact that it failed to achieve its target to the downside indicated there was still bullishness in this market. And then we have the E category interaction, which was over here where price crossed back up above the FLD. The fact that price then reached its target and exceeded it, as you can see, indicated that the bull was still alive. Then we have the F category interaction, where price drops down below the FLD and we expect it to reach its target, which of course it did. Roundabout over here. I'm not being very accurate with the calculation of my targets, but it did reach that target. Then we expect price to come back to the FLD and find resistance. And now this is where I want to focus for the rest of today's video. This is called a GH category interaction. So let me, well, before we clear all of that, the GH category interactions where price comes up and finds resistance at the level of the FLD before a final move down into the next 80-day cycle trough, which in this case is also a trough of the 20-week cycle. And so this is a textbook sequence, if you like. Not absolutely every interaction reached its target, but by failing to reach its target or exceeding its target, it revealed the bullishness in the market until, of course, price dropped down below the FLD for the move down into the 20-week cycle trough. So let's just focus in on this period of time, which was last week, and speak about how we can use the FLD to monitor the situation of the market. As price approaches a trough of 20-week magnitude, or at least 80-day magnitude, we are always faced with the same question, which was perhaps the question that you were asking yourself after last week's market update video. If the 20-week cycle trough has formed, then the next thing we're going to see is a big break out of the 20-week cycle trough, and that's a long trading opportunity. And we would expect, of course, an A category interaction for the first interaction as price crosses above the 20-day FLD, bouncing out of the 20-week cycle trough. But what happened last week? Price came up to the FLD. Can you see that? It came up to the FLD, but it significantly failed to get across the FLD. That is a perfect example of the way in which the FLD can provide resistance to price. Now, it is what I describe as approximate resistance. Sometimes it's extraordinarily accurate, but often it is approximate resistance. You will notice that price failed to close above the FLD on any one of these days, but the close is not really the important price to watch. The important price to watch is the median price. But even sometimes the median price will pop its head above the FLD, as I believe happened on this day over here. Was that on the 1st of December? I think it was. The median price of that bar just poked its head a little bit over the FLD. That is not absolute confirmation that price has crossed above the FLD. But if you were watching price action carefully, you would have observed day after day, bar after bar, how price was finding approximate resistance at the level of the FLD. It was struggling to get through it. And so, in fact, as that started happening, you would have said to yourself, this does not look like an A category interaction. It looks like a G category interaction, which of course will be paired with an H category interaction, where price will drop down into the 20-week cycle trough. There are some traders who will monitor the support levels that are forming over here on a shorter time frame chart when price is clearly finding resistance at the level of the FLD and enter into a short trade as price breaks down below those support levels, having failed to get above usually a longer cycle FLD, such as the 20-day cycle FLD in this case. And so this was our H category interaction as price came down to form the 20-week cycle trough. Now, there is one other interesting observation that I would like to make here in terms of the formation of the 20-week cycle trough. I speak in every one of these videos about the sequence of interactions. So I would now like to ask you, following a trough of the 18-month cycle, if we were looking at an FLD of the 20-week cycle, which is 2 cycles shorter, then at the time of the 20-week cycle trough, where would we expect price to be relative to the FLD based upon the 20-week cycle? I hope that you have correctly answered that question and said that at the time that the first 20-week cycle trough forms following a trough of 18-month magnitude, we would expect price to find support at the level of the 20-week cycle FLD. Let's see what it did. There is the 20-week cycle FLD. Here are our interactions. There is an A category interaction. Price came down and almost touched the 20-week FLD in a potential BC category interaction, which sometimes happens because we get a double BC category interaction. But as mentioned, at the time that the 20-week cycle trough forms in the market, we expect price to find support at the level of the 20-week FLD. Isn't that extraordinary? So let's zoom in. I hope that you were all watching your 20-week cycle FLDs over the weekend, because that was where we would have expected price to find support as it forms the 20-week cycle trough. So does that mean the 20-week cycle trough has definitely been formed in the market? No, absolutely not. Price could still drop lower, but certainly the time is ripe for a 20-week cycle trough to form, and I am going to continue watching the 20-day cycle FLD for confirmation of that trough. We could also watch shorter cycle FLDs. The 5-day, the 10-day, and the 20-day cycle FLDs will all provide us with useful information as we watch the formation of the 20-week cycle trough. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video.